Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bambwani here. I hope you're enjoying my videos and my videos are helping you understand the subtle nuances of the market better, and it's helping you become better investors and traders. In this particular video, I want to share with you why our concerns about rising oil prices may just be a little overdone. You see, a lot of people, including myself, were expecting that once the UP elections were done and dusted, probably from the 10th of March onwards, the government would be raising oil prices at the pump, both for petrol and diesel, and possibly even LPG and CNG prices, and this would trigger inflation. For those of my viewers who've known me for a while now, you know that I watch inflation very, very carefully. I've made a lot of videos about how I go to the vegetable markets and basically collate my own data and make my own inflation indices based on 16 vegetables, 6 fruits, milk, meat and eggs, etc. And this is the way I monitor inflation. So I was expecting, along with a whole bunch of people, that oil prices at the pump would go up, thereby, and oil and gas being multiplier commodities, once oil prices go up, everything from your taxi fares, auto rickshaw fares, transport costs, fruits, vegetables, everything basically goes up in a multiplier effect or a ripple effect kind of a impact on prices. But the point is that we are now seeing a sliver of hope on the oil import front here. It should be noted that India is a net importer of goods and services since independence. 2/3 of all our imports are energy. And where crude oil is concerned, 85% of our needs are met by imports. So obviously, when oil prices are now trading at $100+ a barrel, there would be concerns about the spiraling effect of inflation on the average Indian citizen, the Aam Aadmi, and what it would do to the GDP and the economy, and by extension to the stock market. But what has happened is, help, as the Chinese proverb says, can sometimes come from unexpected quarters. You see, there are two sources of crude oil which are likely to come to the rescue of the Indian economy and give it a head start over its other emerging market peers. Good news number one, the Russians are willing to supply crude oil to India at a steep 25% discount to the prevalent market prices. Those of you who are following the news or maybe even connected with me on my social media accounts, you would have seen how we've seen updates about how the Russians have sold crude oil at a good $28 per barrel discount to Royal Dutch Shell, and that too, the shipping and insurance was borne by the Russians and crude was delivered at the doorstep. India also is receiving a similar discount, and as a matter of fact, Indian Oil Corporation has bought 3 million barrels of oil from Russia, and Bharat Petroleum or BPCL has imported 2 million barrels of oil from Russia at these massive discounts. So the Russians are willing to sell, and I have always said in my videos about crude oil that I think $100 a barrel, and I'm referring to WTI because India does not import Brent. We are concerned with WTI or Western Texas Intermediate. So far I've been saying that $100 a barrel is kite flying. The market has proved me wrong to the extent that nobody could have predicted a war in Ukraine. So if you take that factor away, you've seen how crude oil immediately sank below the $100 a barrel mark once there were some feelers about a possible peace between Ukraine and Russia. So you can say that I was wrong. crude oil went up above $100 a barrel. In my defense, I would say that a war is something that nobody could have anticipated, but this is the subject of another video altogether. Right now, what I would tackle is that in addition to the Russians who are so keen to sell crude that Russian crude oil is floating around in VLCCs or very large crude carriers around the ports in Singapore. They are willing to give you delivery ex-Singapore. And Russia is the second largest non-OPEC exporter of energy. So, Russian crude is available. The second good news is Iran. Iran has very categorically stated that it is willing to meet or more than meet India's requirement of energy, because Iran in the good old days used to have a barter / rupee real trade terms. We have even had food for oil arrangements with Iran some years ago. But erstwhile President Donald Trump of the United States basically stopped this import of Iranian oil by India, and from $17 billion per year of bilateral trade, Iran-India trade has fallen to $2 billion per annum. The Iranians are willing to revive the rupee real trade, wherein we pay them in reals and they pay us in rupees, or they are even willing to go up to rupee trade. So we pay them in rupees and they pay us back in rupees for the exports that we send to them. What is the extent of this bilateral trade as per Iran's offer? $30 billion US, which is almost double of what we used to do earlier at $17 billion. So if there is any feeler of peace between Ukraine and Russia, crude oil prices fall in the international domain, we automatically get relief. Even if the war was to prolong and we are continuing to get cheaper oil from Russia and or Iran, we are not done with Iran yet. No pen has been put on paper yet. This is an offer, and I think if we run short of Russian supplies, we might just consider Iran's offer. We don't know yet, but there is always hope. And what is the stock market but a forward discounting mechanism, wherein the market basically looks for news to discount, and the news that is coming in on the hydrocarbons or the energy space is quite optimistic. So I don't think that the market should fret too much. And like I've said in my video earlier, why the Ukrainian war is nothing but a blip on the long-term radar. You are basically seeing all those hypotheses of mine are kind of coming true. And also remember the Bank of England video that I put in there, bear market investing. Markets tend to shrug off bad news. If it is short-term bad news, 10 to 14 days, intermediate bad news, 10 to 14 weeks, and long-term bad news, which is a bear market, 10 to 14 months. And you can give me a shout if you see any flaw in this theory. You're seeing how long the worries about the Ukrainian war lasted in terms of number of sessions that our market fell. There is still hope yet, there is still optimism yet, and this is time to hold on to your core portfolio, your long-term core portfolio, and it's definitely not the end of the world. On this cheerful note, I'll bid goodbye to you, not before reminding you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I always welcome your feedback, and please help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Thank you for your patience. This is Vijay Bambwani signing off for now. We meet again in my next video very soon. Have a very, very profitable day. Bye-bye.